As he mentioned, the lack of ride-hailing plan details has shares of Uber and Lyft absolutely surging today, with Uber hitting a 52-week high. It's up almost 10%, so is Lyft. But my next guest isn't cheering quite as loudly along with the rest of the street, saying both of these companies should, over time, expect more competition from Tesla, maybe as soon as next year. Joining me now is Cunningham. He covers travel and transports at Melius Research. Connor, it's great to have you here. Kind of boil this down for us. Why do you actually see a threat kind of around the corner?
Hi, Kelly. Thanks for having me. The lack of detail around the ride-hailing application obviously was a big disappointment, but it seems inevitable at this point. We already have autonomous vehicles on the road with Waymo. Obviously, Uber has a relationship with them, but these cars are coming, and they're going to change the game on some level. So it's not that we obviously see the benefits to Uber and Lyft in the near term as the view starts to shift more back to the fundamentals, where there's a pretty compelling story there. But over the long term, competition should likely step up from here. There will be plenty of new entrants. You have a lot of big companies with a lot of money behind them looking to get into this space. Not just Tesla, you have Amazon and others. So it should be interesting over the next couple of years.
I'm curious. Kind of can't wait to get details on the financials behind Uber's partnership with Waymo. Who's paying whom exactly what in order to kind of roll this out. You have a hold on both stocks with price targets around where they are right now. Don't know if you caught Jenny Harrington last hour on Uber, and she was saying, look, they're growing earnings or EPS, 100% this year and 40% next year and a 4.5% free cash flow yield. And she was like, all of those things alone make me want to own it, let alone, whatever may be coming down the pike. Is there some truth to that, at least in the near term?
Yeah, I mean, these are two companies that are in a secular growth industry. I mean, there's plenty of opportunity for them to grow, over the next couple of years. They talk themselves about, 15% gross booking CAGR over the next several years. There's plenty of opportunity to just continue to grow the share there in terms of overall just driving up frequency and adding new guests. Like the penetration rates on all this stuff is still really, really low. The core business itself remains strong, but to Phil's point earlier, Tesla's going to talk about this every time they can. So they see the opportunity as well within that business segment. So it's not necessarily that I think the fundamentals are weak there. It's just the fact that there's going to be potential incremental competition, and that should, in theory, weigh on the multiple. Obviously, we didn't get a lot of detail around when all that's going to start to happen, and that's likely the driver behind the stock in the near term. But it's coming at some point, so we will see.
Yeah, I take your point that each ensuing event makes it a little bit more real, and we know he'll roll things out maybe before they're ready for prime time. So at some point, it's going to be on the road. You are looking at the economics of this. A lot of investors and analysts are as well. Just talk to us about when Musk says the cost per mile for Cybercab will be 20 cents. What does that say to you?
Yeah, so that's a good question. So, just the current cost per mile of a standard car ownership right now is sitting around like 65 cents. So, if you can get to a Cybercab of, 20 to 30 cents overall, like that's obviously would be a benefit to the consumers out there in general. Uber and Lyft right now, cost per mile is like, depending on where you're riding, is about $1 to $2. And a lot of that goes to the driver itself. Over 70% of that goes to the driver right now. So if you can remove that driver, there's obviously a huge economic benefit to both these companies. But again, the question is like, who's going to end up owning it? Does Uber and Lyft need to go out and order a significant amount of Cybercabs themselves? It would change the whole cash flow profile of the companies, the earnings trajectory, and so on. So they go from basically asset light to asset heavy, and so on. So those are all the questions that need to be answered along the way. Are these companies going to have to maintain fleets and whatnot? So plenty of questions still to come, and obviously, without a lot of significant answers from Tesla yesterday.
No, I appreciate you thinking through this and those economics as well. Curb your enthusiasm, I think, is the message here. Connor, thanks for your time. Good to see you.
Thank you, Kelly.
Connor Cunningham with Melius.